David Steinbach, Global CIO at Heinz, is joining us with more. Good morning and welcome to our studios.
Good morning. Thank you for having me.
I was watching some of the interviews you gave recently, and I noticed one comment in terms of the comparison between the United States and Europe. And you said that at the start of this year, we were a lot more positive about the US than we were in Europe. Walk us through how that dynamic has changed 6 months into the year.
It really is incredible how in 6 months the sentiment has changed. I was at the World Economic Forum in January, and at the time, it definitely felt that every marginal dollar was looking at the United States as a target. And since then, I think things have radically changed. And the way I would express it is that I think capital is looking to stay closer to home right now for a lot of reasons. I think the overall volatility in the markets is causing that to some degree. But also I think capital is seeing the amount of investment that needs to happen within their own countries. And so then you need to look at where are the deep pools of capital, and certainly Europe has them, Germany, France, UK, significant pools of capital that might have been going to the US or other places are now looking to stay closer to home.
It's so interesting to hear that, because even though this narrative is not necessarily new, it's still unusual to hear how capital is actually staying in Europe. When you think about deploying investments across the European continent, what parts of the real estate market are you most focused on?
Well, right now, it's really important to remember that the private markets and public markets price in a very different way. And the private markets are in its own cycle, which is really still recovering from the interest rate hikes we've had the last few years. And so we're in this space where capital right now is most focused on acquisitions. And there are some really good buying opportunities right now in Europe in the private markets. And capital is not looking so much at development right now, which I think is an embedded opportunity that is going to build momentum. The reason for that is because a lot of new developments right now are very hard to pencil mathematically because rates have gone up, so the cost of borrowing has gone up. And we're in this space where rental rates have not yet gone up as well. And so that makes acquisitions much more attractive. I think what investors are going to miss is that shift into development is often happens sooner than people think. But in the meantime, right now is a great time for acquisitions.
So is that where you're focused?
So right now we are focused mostly on acquisitions. We're closing projects right now all over the continent. We're recently living is one of our #1 strategies.
I saw the announcement in Sweden.
Yeah, we about 500 units just outside Stockholm, and so that was a great purchase. We're focused on that. Also, retail is a very interesting sector right now. I think it's definitely been beaten down the last decade really because of e-commerce wave, and so the winners and losers have been sorted, and so we see an opportunity there as well.
So explain to me that, because as you highlighted, we have seen retail perhaps as being the least loved part of the real estate market. So how are you investing in that space?
So, again, well-located retail, the winners and losers have been mostly sorted. I think a lot of retailers have also figured out the omni-channel in some interesting ways where they've really embraced e-commerce and allowed it to be part of what they're doing in the bricks and mortar. And I think that has really helped the case for retail.
I also noticed in one of your recent interviews, you suggested that you are long US residential. I'm trying to understand how you're positioning in Europe. Is it also the same approach, long residential? Break it down for us.
Yeah, the overall sector of living globally is undersupplied. And like I was saying earlier, there really is a lack of new development coming. And I think investors really need to see that as an important sign for why acquisitions make sense right now. In the United States, there is a certain strategy more around build to rent and single family. Here in Europe, we're more focused on specific sectors. So for example, student housing is something that we're very focused on. There's a lot of international students who are now looking at Europe in a great way. And the entire sector is undersupplied. And so we're seeing great opportunities here in the UK, in Spain, France. So it's been a very interesting market to track.
I did notice your announcement for PBSA in France as well. I would like you to give us a little bit more color in terms of what you're seeing in that part of the market. In particular in Europe, you highlighted 3 markets there, but give us a little bit more in terms of what you're doing on that front.
So a lot of what we are doing is providing a product that doesn't really, is very nascent and how it expresses itself in Europe. And there's a service side to that as much as a physical product side of that. And especially when you put yourself in the shoes of an international student who's coming to Europe. Maybe they're an international student, from Asia, and their parents are sending them a long way, halfway around the world to study, and they want an experience that is they're well cared for, right? And these parents are willing to pay a price point that makes sense to pay for the service, and so we're seeing very attractive demand pools for that.
Are you entering any new markets in Europe for PBSA? Given that the UK is actually quite developed when it comes to that.
Right, we're mostly focused in the core markets in Europe, and especially for universities that are now offering English classes, and so that again is likely to attract more international students.
Right. I would also like to talk a little bit more about defense spending, because this is the story in Europe, and I'm trying to understand what are the ramifications for infrastructure. Walk us through what you're doing in terms of investments on that space.
Yeah, this is something I do think has helped to change the sentiment in Europe, is I think investors are seeing the amount of spending that is expected over the next few years, and certainly things around defense are one of those deep demand corridors that are going to be significant. And there is a lot of infrastructure that's going to need to be built. There's a lot of things that the government will do, but there's also a lot of things that private industry will need to do to help support that. And so around those corridors of demand is what we're tracking. So it's going to be things in logistics, it's going to be things even in housing. And so that is going to provide a great runway for private investors to find some great opportunities and returns.
Would you say that is the new exciting bit for real estate investment?
Here in Europe, I do think it's going to be an important demand corridor. I think there's some other ones too. I mean, look, the economy. Well, the economy is look. There's some clear things that are going to shape the economy here in Europe. I think defense is one of those. I think data. I think certainly things around technology. I mean, these are all going to be demand corridors that are going to need further investment. I think further reshoring here in Europe as well. I think as tariffs are probably here to stay to some extent globally, so friction cost of trading goods is likely to be a thing that's going to be with us for a while. The manufacturers in Europe are going to be bringing more of that back here to Europe.
When it comes to data centers and all the investments around AI, I'm trying to understand whether Europe can actually compete with the United States when it comes to building these facilities, because they just seem to take a lot of space, a lot of land that Europe doesn't necessarily have per se when you compare it to the US. Explain to us what sort of investments are happening in this space, Europe versus the US, and to what extent are you involved?
I think Europe will need to take this on, and so I think this is something that Europe will need to figure out more broadly, and I think it is being figured out. There's a lot of opportunities that we're seeing here, both in the continent and UK. I think that where and how might be a little bit different than the United States, and I think that Europe will need to find its own answers to some of these. But without question, I mean, the race for data is a global one, and so it'll play itself out here as well.
I don't have much time left, but I want to squeeze one more question, because when it comes to real estate, we're always talking about the so-called return to the office. I was just wondering where we are in terms of that dynamic at this stage of the cycle. It
has been interesting to watch just the dynamic globally and to see it play out in different places. I mean, some places like in the United States, had some overbuilding occurring, and here in Europe, it's quite different. I think that you really have to see, look, return to office without question is back, and we're really seeing the dispersion. The best of the best are actually doing very well. Our office projects in Europe are well let. We're seeing some rent growth even. Capital market appetite is behind, and I think that imbalance will work itself out in the next 12 to 18 months.
But are companies still looking for size, or they're looking at smaller offices?
I think companies are looking for high quality in what they're providing in office, and that's both location and product. And I think the high quality office projects are going to win.
Okay, fantastic. Thanks for joining us today. Hope to see you again soon. David Steinbach, Global CIO at Heinz.